Welcome to the Lend Academy podcast, episode number 233. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lend It Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lend It Fintech, lending and banking connected. Go to lendit.com/USA to register. Today on the show, I am delighted to welcome Sankaet Pathak. He is the CEO and founder of Synapse. Now, Synapse is a really interesting company. They're basically a banking platform, an API-based banking platform. They say they enable companies to build and launch best-in-class financial products. And they really are at the core of this movement, this change that we're seeing in banking into this sort of banking as a service, embedded finance. And we talk about that in some depth, and actually Sankaet gives us his perspective on where he thinks it's going. We also talk about the different product offerings they have. One of them is really interesting, a lending product. They're talking about how they are able to really enable warehouse funding lines, which is for lenders, which is really interesting. We talk about how Sankaet, as a first-time entrepreneur, has been able to raise money from some of the biggest names in venture capital. And we talk about what else is on their roadmap for 2020. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Sankaet.
Thanks for having me, Peter.
My pleasure. Okay, so I like to get these things started by giving the listeners a bit of background. You've had an interesting background to date, so why don't you just give the listeners some of the highlights of your career before Synapse?
Yeah, before Synapse, I was essentially doing my graduate work. So I was at University of Memphis, finishing up my graduate school in computer engineering, but most of my research was involving neurophysics. So we were doing research at the sun, which is the corona of the sun. That required kind of doing a lot of like image analysis. So a lot of my time was spent doing computer vision type stuff and analyzing coronal loops in the sun. About that time, I started to think what I wanted to do after I graduated, and I tried to apply for a bank account at Simple. Simple was this neobank, the first neobank, if you may, I think, in America. And I was denied a bank account. And that reminded me of the experience I had when I'd come to America, which was no bank was opening up a bank account for me digitally. I had to go into a bank branch in Bank of America, which was like 2 or 3 miles away. I was very shy back then, so I didn't ask any of my friends to give me a ride. I literally walked all the way there, and they asked me for my passport, my proof of address documents, and things like that. And when Simple denied me a bank account, to me it seemed like everyone was trying to go digital, but there was no back office that was accommodating that infrastructural growth, because otherwise, it would always be confined to immigrants or people with no credit having to go into bank branches. So I decided, let's try to use a little bit that I've learned about computer vision and see if I can help automate the things that I had to give Bank of America in person. And if I can just collect those things digitally from people, try to automate that, and banking would become fairly inclusive to everyone. It doesn't matter if you're new to the country or if you have no credit history. So that is what really kind of like started the idea of Synapse. And since then, we kind of realized that the problem is much, much bigger than that. Turns out it's not just the back office, the core banking software and the financial infrastructure is fairly outdated as well. So we thought, instead of trying to build out the next Simple, let's try to just simplify the infrastructure for the next wave of fintech companies. And if we can do that extremely well, then by definition, the initial mission, which was ensuring that people have access to high-class financial products regardless of their net worth, we would be able to accomplish that by giving developers the tools to build more accommodating products so that when the next Simple started, they wouldn't have the immigrant and low credit score barrier to be able to open a bank account. So that's what we did, just start building out these tools for developers. And through that, we think we can help accelerate solving the financial inequality, so giving people access to high-class financial products across the world, regardless of their net worth.
Mm-hmm. So it's really interesting to me that here you are, you've got no banking experience, no even entrepreneurial experience, and you decided to start a company in a space that's highly regulated and highly complex. I mean, I guess looking back now, because obviously you've learned a lot. I'm sure you didn't know anything about core banking software back before you started, but I mean, were you naive back then when you decided to start? Or was that a good thing? I mean, I'm just curious about the mindset of you back then and how that's evolved.
Yeah, I think definitely I was naive. I don't think I would say I had an optimism bias. I never thought I would succeed. So it's not that I started the company with the idea being, oh, one day we're going to have 160 employees and all these different things. So I never thought we will be at the point that we are today. I still don't think we're successful, but I do think I didn't imagine that we would be here. So I think I was naive in the sense that I thought that me and a couple of my friends together could kind of solve this problem. And yeah, I think that's probably being extremely naive. I think now I have an optimism bias than just being naive. But back then I was naive. So I think that's probably has evolved, which is now I probably have an optimism bias. I kind of I take on things thinking, well, they're going to be hard, but we're going to prevail. So now that is my attitude. Before it was just, I was just naive. I was like, well, it cannot be that hard and few people would be able to solve this problem. So yeah, I think that's probably changed over time.
Right. No, it's interesting because in many ways, because you don't have any experience, you've sort of can look at it in fresh eyes. And maybe just share what do you think were the advantages and the disadvantages, of course, of building Synapse without a banking background?
Yeah, I think the advantages are you do kind of think from the basics. So you kind of think how the system should be designed from scratch versus thinking how the system should be designed because that's the way it's been designed. So if you look at our APIs and you look at other people's APIs, Synapse's APIs look fairly alien in a good way. It kind of resonates with developers. By and large, if you would look at other APIs, there would be a different resource for issuing cards and a different resource for opening checking accounts and a different resource for ACH processing and all these different things. And from the very beginning, in the back of my mind, I was like, there are three primary things that belong in a financial network. One is a user, because you have to KYC people and you have to attach accounts and identities together. So we have a users resource. The second piece, I was like, it doesn't matter if I open a bank account or Bank of America opens a bank account, it's still a bucket of liquidity. So we called it a node. So nodes belong to users, and nodes could be ACH accounts. It could be deposit accounts that we open. It could be an external card from Wells Fargo, what have you. It literally could be a check that you're sending out. And then the final thing is a transaction. I thought of transaction as an email. So you give from which node to which node. And behind the scenes, Synapse just figures out what's the most efficient payment protocol to move this money in. If it's ACH, we'll do ACH. If it's an internal transfer, we'll do an internal transfer. If it's a wire, we'll do a wire, and so on. And no one else has built the financial infrastructure that way. And I think I ended up building it that way because I didn't have a legacy to kind of think through. I was kind of thinking through this from scratch, and I was thinking what was the most obvious way to design this. So I think that ended up being extremely helpful. I think the other pieces that are specific to financial services and maybe specific to kind of running companies in general as well is having not just the engineering mind, but also the people skills. So kind of being super diligent on making sure your partners have a lot of confidence in you taking compliance, you taking customer service, you taking all these things extremely seriously. So you have to kind of build out the entire infrastructure around a very robust compliance, a very robust customer service team. And all those things cannot just be in most startups, you'll be well, sure, we have to go through financial audits and SOC audits, and we have time to do that. But when you're starting a financial services then that's not something you can take lightly. You have to kind of like do that from the very beginning. So having that kind of a download as a first founder from the very beginning, which is like, there are some things you cannot just figure out as you go along. These are things you have to have a strong foundation in from the very beginning. Like one of our very first investor, Doug Marchant, who's pretty much like a repeat founder in financial services. He's extremely successful. One of the first things he told me was that like you have to make sure that like KYC and AML works extremely well. So from the very beginning, he kind of like instilled that in me, which was, well, you have to make sure compliance works like really, really well. And that still stands true. So I think like that piece definitely was like new as an engineer coming in, which is like, oh, well, there are like all these guardrails built around banking, and they're not built for any strange reason other than to protect the customer, and really kind of like driving that home and internalizing that. I think I would not have had to do that if I were building like a social media app or something like that. So I kind of like that I did this, because I think I look at what I would call non-regulated internet very differently as I've done Synapse, which is I think some of the regulatory guardrails in case of like Facebook and Twitter and Snapchat and all these things could be beneficial. So I think I look at internet in a very different and mature way than I would have if I just started some other company.
Yeah, it makes sense. That makes sense. So let's just step back a second. I'd love to, if you could maybe tell us what your product offerings today, maybe what did you start with and how that's evolved over time?
Yeah, we started with something pretty simple. We started with ACH processing. So we said, let's make it easier for people to do bank-to-bank transfers. That I thought was like a good way to get us up and running with financial services. It was a commoditized layer that banks were comfortable letting us have access to. And then we could also build out things that we thought were extremely critical, which is identity verification, like fraud mitigation, things like that, like sanctions filings, checks, and things like that. So we started there. Then after that, we said, let's add a closed loop deposit account. So it's like a wallet. You could hold money in Synapse, and then you can send money out of the payment network, bring money to the payment network. So Sankaet, as an individual, I could open up a Synapse account and have $100, $200 sitting in there that I could fund with an ACH transfer, and then I could send money to anyone. And we thought that would be like a next iteration, because now we would have to figure out how to ledger money. So we did that next. And then after that, we were like, well, we don't just want to keep the system closed loop, so let's issue virtual account numbers. So we started issuing account routing numbers on top of our deposit accounts. Then the very next obvious thing was, let's figure out interest accrual. Then the next obvious thing was, let's figure out card issuance. And then a bunch of tertiary services that go around along with that. And then after deposits, we were like, let's figure out lending and then brokerage and so on. So it's a very like iterative process. And today our product and services we're kind of like a one-stop shop. You come to Synapse as an engineer, compliance, a bunch of these things like KYC, AML, a bunch of these things are already baked into the infrastructure, so you don't have to kind of like build that muscle from scratch. On top of that, you can do all payment processing, so ACH, wires, check issuance, remote deposit capture, card acquiring, what have you. Then you can open up checking accounts, savings accounts, about like 5 more different deposit products depending on the different use cases, like FBO accounts and clearing accounts and so on. You can issue cards. You can originate and service loans, one-time or revolving loans. We're getting a credit bin, so essentially you'll be able to do credit cards soon as well. And then soon we're going to launch like our brokerage account product as well, so people would be able to buy stocks with the API. And recently we just launched our first version of our chatbot product. So we think like simplifying barrier to entry in financial services requires simplifying barrier to entry with compliance, with access to a banking network, giving people the endpoints to be able to originate and issue cards and things like that. And I think another thing that has been a big barrier to entry is being able to do compliance support for your customers. So we're pretty much like building out the service center for our team that we'll make an announcement about the next couple of months. And then in front of that, we're kind of like building out this chatbot product line where people can literally kind of add Synapse as a white labeled chat interface for their customers. And it's going to be automated plus human augmented behind the scenes. And that kind of like goes back to the mission. We just want to make sure everyone has access to high-class financial products, and high-class financial products require high-class servicing. So,
right.
Yeah, that's kind of like literally like just new product that we just announced like 2 weeks ago, and we're iterating through that like pretty rapidly this year.
Sure. So I want to talk about, give us some sense of the kinds of financial institutions you're working with. I see on your website you say 250 plus platforms, but can you give us some sense of, I don't know whether you have any that you can share publicly, but some sense of the type of financial institutions that you're onboarding?
Yeah, for sure. So Dave is an example customer. Dave does a lot of their like ACH processing with us for their cash advance product. And then they're also using Synapse to issue the debit card that they've been kind of like powering. So they're a good example. Then Honey is another good example. They've been using Synapse for some payment processing work, and then their loan origination and servicing as well. So they have this lending product that Synapse has enabled. Then we work with companies like Trim, that's helping customers kind of like reduce their bills over time. So they help negotiate your bills down, and over there, we're doing a savings account and payment processing for them. For Yield Street, we're doing their high yield savings account product. We do payment processing, fiat wallets for Kraken and also Zappo. And then in case of Zappo, we also do card issuance for them. So those are like a couple of example customers that we're doing things for. Mostly our customers come to us either for payment processing or for deposit products or for card issuance. Like some customers come to us for lending. Like currently we have about like 200,000 loan portfolio. And this year we want to expand on that more. So I think we'll probably like take our lending product out of beta into public, hopefully like later this year. That would also come with credit cards. So I think that business can grow like hopefully pretty well this year.
So on that, I'm curious about your line of credit product that you just mentioned, and how are you going to do that? I've read that you're actually going to, people are going to come directly to Synapse, and you're going to negate the need for an outside bank for a warehouse line. I mean, how on earth are you going to do that?
Yeah, so I think there are two pieces to this. One, like banks are like super important to Synapse's existence. So behind all Synapse products, they're like partner banks. It's just we're kind of like simplifying the experience, but people don't have to like go and find a partner bank and find processors and do all these different things. We kind of build this one-stop shop experience for people. On our loan product, there are about two pieces that are pretty interesting. The first piece is originating the loan, like who is the bank of record, who's going to let you originate the loan on their balance sheet. So that's the first piece that Synapse kind of like solves, which is you come to us, we have our partner banks, they help you originate the loan. But what happens over time is our customers still have to kind of like front the capital for these loans because they are the ones who are kind of like taking the financial risk. So today, the way that works is you can get up and running with Synapse with your loan origination product. As you start scaling that, you would have to go outside into the capital markets, like raise like a debt round. To be able to kind of come in and say, okay, I'm going to raise about a 50 or 100 million debt facility to be able to finance these loans that I'm originating through Synapse. Currently, what we're working on is a debt financing product. So in the next couple of months, I was hoping it was going to be in Jan, but I think in the next couple of months, we'll be able to underwrite our customers and say, okay, well, customer X, you've already done a portfolio of $5 million and we understand your performance. Based on that, we're going to underwrite you and give you a warehouse line so that you don't have to go and kind of seek it out elsewhere. Debt financing usually requires like building capital markets team and things like that. It's a clunky process. And like what we've done with banking is kind of like try to really simplify the experience of how to get onboarded and how to really launch financial products. And we're going to do the same thing on the debt financing piece as well. So you can already do the origination piece with Synapse. But we also want to bring in the debt financing instrument so that as our customers scale, they don't have to go and talk to someone else. They can just get the warehouse line through us.
So then you're obviously going to be working, I imagine, with a number of different partner banks to provide the capital. So you're almost like working as as a capital arranger type thing. How is it technically going to work?
Yeah, I think that's a good question. The funny thing is, if you take, with the exclusion of investment banks, the capital at banks is ironically more expensive than capital in private markets. So most of our funders are going to be most likely like private market people, not financial institutions. So I think that's kind of like one interesting piece. The second piece is we're going to build out like a special purpose entity. So pretty much the idea being there's going to be an SPV behind the scenes that literally, like, let's call it like Synapse Debt Solutions or whatever, Fund One. And we will just raise a debt instrument in there. And the entire purpose of that SPV is going to be to originate and lend out capital to fintech companies that work with Synapse. So that's kind of like the construct we're kind of going to go in. I really like the SPV concept in general because that kind of like, you have to define the purpose of fund allocation and how you use it. There's some good, healthy habits around like capital calling and things like that I think is a good idea. So you pretty much end up managing it like a fund by and large. So that's what we'll do here.
Okay, very, very interesting. That's a creative way to kind of, I imagine, like it's almost like a value add for your existing customers. Okay, so I want to talk about the new buzzword of 2020, and that is embedded finance. And you are sort of you've kind of built this company with this in mind. It's where you've got each particular piece is its own thing, and you can plug and play different components. So I'm curious about how you how you view that term, but where do you feel like where are we going with this? I mean, I feel like embedded finance has sort of we've been moving in this direction for some time, but where is it going to go from here?
Yeah, that's a good question. Yeah, I like they're new terms. Synapse was doing this before banking as a service was a thing.
Right.
Now everyone's like talking about BaaS. What is BaaS? I don't know. But yeah, I think if we step back from all of this, I think the most important thing is how can we distribute high-class financial products to the masses that either didn't exist before or were only accessible to really affluent people. So that requires innovation on a couple of fronts. That requires innovation on the back office, which is what Synapse is trying to do. Then that requires innovation on the user interface, which is what almost every consumer-facing fintech company is trying to do. It also requires a lot of innovation in servicing because to be able to do these things at scale, you would have to have a really efficient application and a servicing operation. And the fourth thing, which is where most of the focus goes these days, because in private markets right now, there's like a lot of capital, is CAC, which is cost of customer acquisition or distribution in general. I think, and this is my perspective, and some people disagree with this, I don't think there's going to be a couple of brands that would really eat the cake. Like, I don't think that's going to happen. I think what's going to happen is, and what happens in almost any industry that gets commoditized way too much, is that there's a lot of competition, and mostly people shop based on their cultural and fashion preferences. What do they want to be associated with, and like who do they really resonate with? We've seen that happen with credit unions in the past in financial services. We've seen that happen with clothing. We've seen that happen in food and all these different things. Pretty much the entire clothing infrastructure built in India, China, and Bangladesh accommodates almost all brands. Mostly the entire infrastructure built by Cisco and alike accommodates almost all the food revolution that we see. And I think something similar is going to happen in financial services, which is you're going to have almost all these financial products become extremely commoditized, and you're going to have some customers that have a large addressable population. So Apple's an example of that, and they would distribute financial products. And then you would also have new fintech companies that would really cater to a certain portion of the population. Like Dave is a good example of that. Propel is a good example of that. The market they're going after traditionally didn't have enough margins and was not as big as people thought it was, for any large bank or for any Apple type company to service. And I think that's just going to happen more and more. We're going to be able to mine a lot of markets, like the Nepali immigrant population in America. Nepal is a fairly small country, but there are a decent amount of immigrants here, and they have very different needs. Mexican immigrants have very different needs. And all these different use cases are going to get polished and refined, and people would be able to kind of like accommodate those smaller markets and still make good money to be able to have a sustainable business, because the cost of running financial operations is going to go down and has gone down significantly. So I do think there are going to be some large players. Apple is an example of that. Maybe like Amazon's going to do something. But on top of that, there are so many of these like pockets of innovation that still need to be mined and still need to be catered to. That's going to keep on happening. And then on top of that, I think like Robinhood and Wealthfront and all these people have built some very compelling consumer brands. Chime, I would put in the same category. And because of the fact that they've made themselves trusted consumer brand, any financial product that they offer would have some adoption as well. So I think those are all different variants, and that probably goes back to the piece that you're talking about, like embedded finance in general. And that's what's really going to happen. Like they're all different acquisition channels for financial products. Some of them are going to innovate on not just the fact that they have a large customer base that they can distribute products to, but also kind of like really solve some legitimate needs that no one else is solving. And combination of all three of them, very, very popular brands, trusted financial brands like Wealthfront and Robinhood, large companies with like good distribution moats like Apple, and then companies that would mine new use cases like Propel and Dave. I think we're going to see a combination of all of them.
Right. Okay, makes sense.
But I think one thing that would happen across board over the course of the next couple of years is financial products are going to become by and large global. Like I think the Revolut thing is going to be default in the next 3 to 4 years.
Interesting.
It's going to be like the default option.
So does that mean that you are Synapse is thinking globally? Are you looking at taking this beyond the US?
2 weeks from now, we will make an announcement.
Okay. Yeah. Stay tuned, everybody, on that. So we're almost out of time, but a couple more things I really want to get to. I was looking back at, I saw this, the interview you did with Angela Strange of Andreessen Horowitz, and you have some other A-list VCs that you have raised money for, and it's pretty impressive because you are a first-time CEO. So tell us just a little bit how that process has gone and how you're able to get some of the biggest names in fintech VCs on board.
Yeah, I think I feel really lucky that happened. And like what last 2 years have kind of like demonstrated to me is like they're like really good people. Like, so having some really supportive people and really smart people around you is very, very helpful. So yeah, it's been pretty interesting. Like, and it's fate is a weird thing. Like, the funny thing is when I first moved to San Francisco, I knew no one here, and I knew like someone who had recommended I should kind of like move to San Francisco. They made the first introduction to a venture firm. That venture firm ended up being Trinity. So I went and I talked to some people at Trinity, and Shork back then was not at Trinity, but he was an entrepreneur in residence at Trinity. So at the very, very beginning when I moved here, I spoke with Trinity about Synapse. Back then, they didn't end up investing, but that's how I met Shork. And then years later, when I wasn't even looking for a Series A, Shork reached out and he was like, I think I'm going to lead your Series A. And it's funny how those kind of like things add up. And then I had also met Aryan from Core like way back, and I really respected and respect Aryan and Kat from Core. I really, really, really resonated with their mission, which is pretty much Synapse's mission to ensure that everyone across the planet has access to high-class financial products. So so deep synergy there. So when I was raising my Series A with Shork, I reached out to RM and I was like, I'm not talking to a lot of people for participation. There are like 3 people that I'm talking to, and you're top of my list. And if you say no, I'd be really sad. and then and then he was like, okay, let me go back, think about it. And then he came back and he was like, you know what, we're actually going to invest. And I was like, that's awesome. Then I think a couple of our customers that were in recent portfolio companies probably mentioned Synapse to Angela and Alex. And then I remember having a call with Alex and Angela before they even got interested in like raising, in investing in Synapse. And they made a couple of introductions like with Visa and things like that. And they were extremely helpful. Then after a couple of months, like Angela messaged me and said, hey, I want to come and visit you at your office. And I wasn't really looking to raise, and she came by, and I was like, Angela is a product person. Angela did this recently. She did this presentation at A16Z's, I think annual summit, and the amount of depth she has into things, she goes in extreme detail about how things really work, and only by and large only product people can do that. Mm-hmm. So she had similar depth when she came and met me. She understood our API as well. She understood the product really well. And at that point I was like, this is one of the first investors I've talked to that actually understands our API. So I was like, if I'm going to raise, I'm going to raise from her. And that's what ended up happening. They ended up raising a round from them. So it was pretty much like that. I met these people organically, and I think they liked what we were doing. So they ended up participating and became a part of the journey.
Mm-hmm, mm-hmm. Interesting. So before I let you go, there's also something I read that I thought was super interesting. And you said, I read that you're starting a seed investing program to help some of your clients build their company. Now, tell us a little bit about how that's going to work.
Yeah, I was wanting to do that end of last year. So we're kind of behind on it, but I think we're going to do it this year. I think this year we'll end up doing it. I have a couple more things I'm going to finish before that, but I think we'll end up doing the seed financing thing as well. It's going to work very similarly to our warehouse line product, which is we're going to have a special purpose vehicle and have some funds allocated in there. Now we're still debating if we're going to do bridge rounds or if we're going to do true seed rounds. I'm not sure about that, because we might just end up saying, well, we'll do convertible note type financing between rounds to help people demonstrate growth, because I think that's where we end up. I think Synapse would be a good partner on 2 fronts. I think one, we've seen so many financial products get built at this point that we have some insight into how best to do these things. And I think the second piece is we can definitely give you your platform to be able to help demonstrate demand and growth. Mm-hmm. So those are 2 pieces. And I'm not sure where do I feel comfortable adding the most value to today. First one is very hands-on, because we'll have to strategically also advise people. The second one's hands-off. It's more so just giving capital and letting things take its shape. So based on so much stuff that goes on, like new countries that we're adding, the service center we're taking live and things like that, I think we might be stretched too thin on giving a lot of hands-on strategic advice to people. So I think I'm leaning towards doing the bridge round between seed and Series A, with the pitch being, take a little bit of money from us. Most likely, if your product is extremely good, you will end up raising your Series A at a much better valuation in 12 months than you would today, mm-hmm. and we can help showcase that. Mm-hmm. So I think that's what I'm leaning towards doing. So I think that's the piece we're probably going to end up focusing on.
Okay, interesting. And so finally, then, what else is on your product roadmap for this year?
Yeah, so we're definitely we're gonna do some global stuff. I think that thing is front and center. We're gonna do our brokerage account product. We're gonna scale our lending and card issuance product, and then we're gonna add some cool features to our chatbot product. The chatbot product is pretty interesting and key for us at this point. So we're gonna keep on iterating on that. The goal is to start from doing easy automated flows, link your external bank account, upload any enhanced due diligence KYC information, link your bill pay all the way to general support. Then we want to go a step further and we want to see if we can help give people financial advice as well. So we probably would jump into that, if not this year, next year. But we're like building out some cool stuff for it. Like one thing that our machine learning team, the same team that built out our data enrichment product, which is like the whole mandate with the data enrichment product was make sure that no one ever has to Google search what's this charge again. Right. So being able to give people the merchant logo and the name and the location, just very clean data on every transaction. Mm-hmm. Now we want to take that one step further because we own our own card issuer and processor now as well. So if someone swipes a card, we can recognize the merchant about like 95+% of the time. Version 2, we have 100% enrichment guarantee with a 2-day SLA. So in 2 days, even if it goes through a manual flow, because we've built out this like semi-automated retraining pipeline, we can essentially queue things behind the scenes and like have some manual oversight on them as well. With all of that combined, the next thing I want to do that I think is really going to become a bigger issue, even though it hadn't yet, is the subscription play. Almost everyone subscribes to way too many things, and then they forget to unsubscribe. So we want to be able to automatically detect all of your subscriptions, give that in an easy API call, and tell you, hey, you're subscribed to like 6 streaming services. Do you want all of them? And if the users say, no, actually, I want to discontinue these 3, then automatically discontinue those for them. So moving forward, Hulu or HBO Go or whatever, don't charge them anymore. And we can do that because of our processor and because of this like data enrichment tech that we've built. So like simple things like that we'll start off with and then try to make it a little more complex over time.
Well, that's super interesting, but we'll have to leave it there. Sankaet, I really appreciate you coming on the show. You've certainly come a long way, and I wish you all the success in the future. Thanks again.
Thank you. Thanks a lot for having me.
Okay. See ya.
Bye.
I don't think anyone can argue that the banking infrastructure, the financial infrastructure that banks have been built on needs to change. It needs to change dramatically. And companies like Synapse are really enabling this change. And, it's interesting that the fintechs of today are choosing to go with these newer types of companies that really are built on an API kind of economy, built to sort of plug in different components and built so that they can easily be updated. I feel like we can't make the same mistake where we build a whole new infrastructure that is difficult to maintain and we has a repeat the same problem all over again. We need this kind of nimble and ever sort of customizable infrastructure, and that's what Synapse is building. And I think it's fascinating. And I think companies like Synapse are going to provide the framework for the financial system of the future. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lendit Fintech USA, the world's largest fintech event dedicated to lending and digital banking. It's happening on May 13th and 14th, 2020 at the Javits Center in New York. Lending and banking are converging, and Lendit Fintech immerses you in the most important trends of the day. Meet the people who matter, learn from the experts, and get business done. Lendit Fintech, lending and banking connected. Go to lendit.com/USA to register.